The American dollar has been the backbone of the global economy for nearly a century. It is the currency that rebuilt Europe, powered global trade, and replaced gold as the world's ultimate guarantee. But today, for the first time in decades, cracks are beginning to show. Countries are diversifying, alliances are shifting, and trust in the dollar isn't what it used to be. But can the global economy survive without the dollar? And if so, where's the new global currency? Welcome to Rebel Economics, and thanks for joining today, where we discuss the dying dollar and have a look at what lies beyond. But first, we must travel in time, back to a world much darker than ours. Let's go back to 1944. World War II is raging on. People are fighting and dying, and at the same time, other forces are at work. The forces that are trying to figure out what a post-Second World War economy would look like. Putting it like that may seem cold and calculating, but let's not forget that the Great Depression had just happened. While the war effort had injected money into the economy, the fear of what would come after was tangible. So an agreement was made to rebuild the world economy, prevent another Great Depression, and create a stable international monetary system. That is how Bretton Woods came to be, a global financial agreement signed by 44 allied nations during World War II. There were many parts of the agreement. Bretton Woods created the International Monetary Fund, the World Bank, and, for the topic of us today, most importantly, a new global currency system centered around the US dollar. How did they manage that, you ask? Before Bretton Woods, the economy was upheld by the gold standard, meaning that their currencies were directly convertible into gold. This tied into the gold reserves that each country had to back up the security and worth of their currency. But after the chaos of the Great Depression and World War II, the world needed something more flexible. So instead there being a direct conversion of any currency to gold, now only one currency was tied to gold, the US dollar. All other currencies were in turn tied to the dollar instead of gold directly. And in return, the US promised to convert dollars into gold at $35 per ounce. This might seem laughable considering nowadays the price of gold per ounce is at over $4,000, but well, it was different times. Looking at it from today's perspective, you might wonder why other countries agreed to that. But back then it made sense. The US held over 60% of the world's gold reserves after World War II anyways, and many countries trusted the dollar more than their own currencies. After the turbulent times of the 1930s and the inflation or hyperinflation that many countries witnessed, this comes to no surprise. And for a while, it seemed like that was that. The dollar was the global currency, everyone could rely on it, and it provided stability and tranquility across the globe. All is well that ends well. Except that it didn't end here. By the late 1960s, the US was printing more and more money, meaning that the amount of dollars they had became entirely disproportionate to the gold reserves. And after all, that was what the entire system was based on. So countries began demanding gold in exchange for their dollar, and US gold supplies started collapsing. By 1971, President Nixon ended the dollar's convertibility to gold and officially ended the Bretton Woods system. And while that might at the time have seemed like the end of the dollar's dominance, that was not the case. Even without gold backing it, the dollar stayed the world's reserve currency. The US economy was still the strongest, and the end of Bretton Woods did not take the entire US economy down with it. Countries still considered the US Treasury market as the safest. Much of the global trade was deeply steeped in doing it in dollars, and vital commodities like oil were priced in the US currency. Apart from that, there also just wasn't an alternative. No other currency was trusted enough to replace it, so the dollar remained on top of the world. True, it was no longer backed by gold. Instead, it was backed by economic power and global trust. That system held on for another 30 years, but since the 2000s there has been a gradual shift where the trust in the dollar just isn't what it used to be anymore. The early 2000s was an era of the US putting massive sanctions on other countries. From 2003 to 2010, the US put sanctions on Iran, in 2014 on Russia after taking Crimea, and in 2022, the US froze $300 billion of Russia's foreign reserves. I don't want to go into the politics of it all, whether those sanctions were deserved or effective. But the point is that countries began to fear that holding dollars made them vulnerable to US political decisions. During the previous Trump administration, from 2017 to 2021, over 3,900 new sanctions were issued, more than any administration in history. No one was safe. Sanctions were placed on Iran, China, Russia, Venezuela, Turkey, and even threatened against European countries. Apart from this, the US under Biden also threatened to cut countries off from SWIFT, the global payment network. SWIFT ban was a shock to many countries because it proved that the global financial system could be used as a weapon against a major economy. SWIFT isn't a bank. It's a secure messaging network that connects over 11,000 banks in over 200 countries. And without it, a country is effectively cut off from the global economy. When the US and EU removed Russia in 2022, it showed every nation on Earth that their access to global payments depends on political alignment, not just economics. It also demonstrated that foreign reserves aren't truly safe, because the same week, the US froze $300 billion of Russia's central bank assets. For many countries, especially those outside the Western Bloc, this was the moment they realized. If it can happen to Russia, it can happen to us. The previous reliance on the dollar and its network quickly turned from convenience to a horror scenario. In today's global economy, the dollar is not just a currency anymore, not an objective signal of value, but it's a gun that can be turned on you at any moment. If the US can freeze your money, the dollar is no longer neutral. Since the early 2000s, another issue arose, namely US federal debt. It kept climbing to new staggering heights, from $5.6 trillion in 2000 to $13.5 trillion in 2010, $27 trillion in 2020, and $37 trillion in 2025. Countries' debts aren't quite like it is for us regular people, but it is still not a great sign. Foreign governments began asking how long the US can keep borrowing without consequences. After all, high debt means inflation risk, leading to a weaker dollar and lower trust. So the more you are mixed up in that, the worse for you it will be when the house of cards comes crumbling down. This has already had real-life consequences. The dollar's share of global reserves has been falling over the past 20 years. Back in 2000, 71% of global reserves were in US dollars, decreasing to 58% in 2024, and most recently 56.3% in 2026. This is the lowest it has ever been since 1995. While that's still over half, it is a clear shift towards diversification and away from the dollar. Countries are building their resilience and slowly reducing their dependence on the dollar. At the same time, alternatives appeared on the horizon that just weren't there in 1944 when Bretton Woods and the global reliance on the dollar were created. China, first and foremost, had become a global superpower, alongside with the other BRIC states such as Brazil, Russia, India, and South Africa. China is the world's largest trading nation and the largest exporter. For them, doing business in dollars just doesn't make sense. Why convert from the trading partner's regional currency to dollar to yuan when you can just skip the middleman? BRICS nations now settle 67% of their trade in local currencies, reducing dollar usage. The world is shifting from a unipolar dollar system to a multipolar currency system. And of course, we can't talk about the death of the dollar without talking about the 2008 crisis. Distrust due to federal debt is one thing, but it's nothing compared to the level of distrust following the crisis that wiped out $15 trillion in global wealth, triggered recessions worldwide, and exposed weaknesses in US financial regulations. To many governments, the 2008 crash looked like a crisis made in America and exported to the rest of the world. The meltdown began inside the US financial system, specifically in poorly regulated mortgage lending, subprime loans, and complex derivatives that were created, rated, and sold by American banks. When these US mortgage-backed securities collapsed, they triggered a chain reaction that wiped out banks in Europe, froze global credit markets, and caused recessions in over 90 countries. What everyone feared by relying on the dollar was proven beyond any doubt to be true. If the US economy crashes, the whole world crashes. And that is terrifying. Countries have no say over American regulations and decisions, and yet they will face the consequence nonetheless. Diversification became a principle of protection. This point was driven home as the US was seen to no longer be as reliable of a partner as it used to be. Under Trump, the US pulled out of several long-standing global frameworks, such as the Paris Climate Agreement, the Trans-Pacific Partnership. It threatened to withdraw from NATO and threatened to impose tariffs on its EU allies, Canada, and Mexico. Countries that were once allies now look at the US with deep distrust. The European Commission officially stated that the EU must reduce reliance on the US dollar, with its strongest countries, France and Germany, calling for European financial sovereignty. And this is not mere rhetoric. Action was taken. The EU created Instex, a payment system designed to bypass US sanctions and thereby reducing reliance not just on the dollar, but on American financial decisions. It was a nice idea, but very short-lived. Instex was established in 2019 and liquidated by March 2023. And if this is how the allies fared, just imagine what it's like to be a historic rival. The trade war with China, whether it be justified or not, had the US impose tariffs on $370 billion worth of Chinese goods. This, of course, could not go without a counterattack. China responded by reducing its US Treasury holdings to the lowest level in 14 years. Both China and Russia increased trade in yuan and rubles, bypassing the dollar entirely and moving the world towards a multi-currency global trade order. After the collapse of Bretton Woods, the dollar's dominance was based on economic power and global trust. But with other economic powers on the rise and a historic low trust, there really isn't much left to prop up the system. As stated by economist Barry Eichengreen, trust and reliance on the dollar can be lost far more swiftly than it was built. So what is next? Is this really the death of the dollar? Probably not. The dollar still accounts for over half of global foreign exchange reserves, and the dollar's international usage far exceeds the US share of global GDP and trade. But it might be the end of a single global currency. The dangers that were exposed cannot simply be shoved under the bed and be forgotten about like dirty laundry. The concerns and fears are real, and each country needs to protect its own interests, independence, and sovereignty. So diversification is the way to go. But what to diversify to? For one, there is the euro. It holds about 20% of global reserves and has been relatively stable for years. This is not yet close to where the US is at, but if there truly is a global diversification, many countries may look to the euro as a valuable asset for their portfolio. Then, of course, we have China, a huge economy whose currency has been added to the IMF's special drawing rights basket. This marks an important milestone in the integration of the Chinese economy into global financial systems. It reflects the growing international use and trading of the Chinese renminbi, recognizing China's progress in reforming its monetary and financial systems. And of course, there's gold. Why move to another currency when we can just move back to gold, which is where this whole story started? Gold reserves may no longer be as vital as they used to be during the gold standard, but it is a strategic form of diversification. And at least that way, you don't need to rely on another currency. Gold reserves among BRICS rose from 11.2% in 2019 to 17.4% in 2025, indicating the return to gold as a means of fiscal security and diversification. Central banks have been purchasing gold reserves at historically high levels, particularly since 2022, and continue to do so. Gold is viewed as a stable asset that cannot be easily frozen or manipulated by foreign governments, making it perhaps more valuable than any other asset. So perhaps the dollar is not dying entirely, just weakening, and instead there being a single new global currency, we are moving towards a multi-currency world. What do you think the future holds? Leave a comment below and let us know. Thanks so much for watching. If you liked the video, please like and subscribe. And see you next time, here on Rebel Economics.